I needed a car, but I had one big problem. I had no credit history. Banks didn't trust me, dealerships wanted insane interest rates, and I felt completely stuck. But guess what? I figured out a way to qualify for a car loan, and today, I'm going to show you exactly how you can do it too. If you're an immigrant, a student, or just starting your financial journey, this video is for you. What you'll learn in this video: how I got approved for a car loan with zero credit, the strategies I used to lower my interest rate, the biggest mistakes to avoid when financing your first car, alternative financing options if you're struggling to qualify. Let's get started. My car loan journey from no credit to approval. When I first tried to buy a car, I faced these common roadblocks. No credit score, banks didn't trust me, high interest rates, some dealerships quoted me 20-25% APR, confusing loan terms. What's APR? What's loan term? I had no idea. Denials from lenders, no credit meant I was labeled as a high-risk borrower. I almost gave up, but then I discovered key strategies that made all the difference. There are ways to get approved even with no credit. Smart moves can lower your interest rate significantly. Choosing the right lender is more important than you think. Step 1, understanding how car loans work. Before applying, I had to understand the basics of auto loans. Credit score matters. Lenders rely on your credit score to determine risk. With no score, I was seen as high risk. Down payment reduces risk. The more you put down, the better your chances of approval. Interest rate APAC. This is how much extra you pay to borrow money. The lower, the better. Loan term, a shorter loan means higher monthly payments, but less interest paid overall. Debt to income ratio, DTI. Lenders want to know if you can afford the monthly payments. Understanding these terms helped me prepare for the loan application process. Step 2, building credit quickly if you have time. If you have a few months before buying your car, try these quick ways to build credit. Get a secured credit card. You deposit $200, $500 as collateral and use it for small purchases. Pay in full every month. Become an authorized user. Ask a family member with good credit to add you to their credit card. This helps build your credit history fast. Use a credit builder loan. Some banks and credit unions offer small loans designed to help establish credit. Pay rent and bills through Experian Boost. Some services let you add rent and utility payments to your credit report. Even 3-6 months of positive credit history can help you get a better loan. Step 3, saving for a down payment. Since I had no credit history, I knew that a down payment would be crucial. It lowers the total loan amount. The less you borrow, the lower your monthly payment. It proves financial responsibility. Lenders see that I was serious about my purchase. It improves my approval chances. The higher the down payment, the lower the lender's risk. How much should you save? 20% of the car's price is ideal. At least 10% is recommended. The more you put down, the better the loan terms you can negotiate. Step 4, choosing the right lender, not just any dealership. I quickly learned that where you apply for a loan matters. Credit unions often have lower interest rates than big banks. Online lenders, some specialize in first-time buyers. Community banks, more flexible lending criteria. First-time buyer programs, some lenders offer loans designed for people without credit history. I avoided buy here, repay here dealerships. Their interest rates were ridiculous. Predatory lenders. Some companies take advantage of people with no credit. Comparing multiple lenders gave me negotiating power. Step 5, getting pre-approved. Pre-approval gave me a better idea of how much I could afford. It locked in my interest rate before going to the dealership. It made the car buying process much easier. What I needed for pre-approval: proof of income, pay stubs, bank statements, proof of residence, utility bill, lease agreement, a cosigner if required. With pre-approval, I was in control of the negotiation. Step 6, picking the right car, avoiding overpaying. My car selection criteria: reliable model, checked reviews and maintenance costs. Portable monthly payment, I calculated all costs, including insurance. Certified pre-owned CPO. This came with a manufacturer's warranty. In negotiation power, I used my pre-approval to negotiate a better price. I didn't pick the flashiest car. I picked the one that made financial sense. Step 7, signing the loan and avoiding common traps. I watched out for these dealership tricks. Dealer markups, some dealerships add unnecessary fees. Long-term loans, a 72-month loan means more interest paid. Unnecessary add-ons. Extended warranties and extras add to the total cost. Hidden fees, documentation fees, processing fees, etc. I read everything before signing to avoid hidden costs. Step 8, driving off in my first car. Cut to me celebrating with my car keys in hand. After months of research and planning, I finally got my first car. I built my credit with on-time payments. I avoided high-interest traps. I picked a car I could afford. My final tips for first-time car buyers. Start building credit ASAP, even small steps help. Save for a down payment to increase approval odds. Compare lenders before visiting a dealership. Get pre-approved so you can negotiate better. Always read the fine print before signing. Want to buy your first car? Drop your questions in the comments. Like, subscribe, and hit the bell for more financial tips. If I can do it, you can too.